The euro fell to a two-month low as finance ministers from the currency bloc struggled to agree on Greek aid, curbing demand for the common currency. The 17-nation euro slid versus most of its major peers after Luxembourg's Prime Minister Jean-Claude Juncker said European ministers will meet again on November 28 to discuss Greece, putting off the decision on how to cover the nation's need for additional financing of as much as €32.6 billion $41 billion. The yen gained against all of its most traded counterparts, reversing an earlier drop, as Asian shares slid. Investors are growing concerned about the risk that Greece will run out of money and that will lead to its exit from the euro, said Keigo Suzuki, the currency strategist in Tokyo at the unit of Mizuho Financial Group Incorporated. 8411, Japan's third-largest bank by market value. Further delay for the bailout will continue to weigh on the euro. The euro lost 0.2% to $1.2683 as of 12:41 p.m. in Tokyo, after earlier weakening to $1.2677, the least since September 7. It declined 0.4% to 100.64 yen. Japan's currency rallied 0.2% to 79.35 per dollar. The MSCI Asia Pacific Index MX80 of shares sank 0.7%, falling for a fourth day. Euro area finance ministers will gather in an extraordinary meeting next week to discuss Greece's financing needs, they said in a statement, read out by Juncker at the conclusion of the meeting in Brussels. The ministers also granted Greece until 2016 to cut the deficit to 2% of gross domestic product. Financing gap plans to give the debt-ridden nation 2 more years to meet deficit reduction targets would open up financing gaps of €15 billion through 2014 and €17.6 billion in 2015 to 2016, according to an assessment by the so-called Troika of the European Commission, European Central Bank and International Monetary Fund that was obtained by Bloomberg News. In Germany, the ZEW Center for European Economic Research's gauge assessing the current economic situation probably fell to 8 this month, according to the median estimate of economists surveyed by Bloomberg News before today's report. That would be the lowest since June 2010 and compares with a reading of 10 in October. Its index of investor and analyst expectations, which aims to predict economic development 6 months in advance, may have recovered to -10 in November from -11.5 in the previous month, a separate poll showed. Worst performance: the euro has lost 6.6% in the past 12 months, the worst performance among the 10 developed nation currencies tracked by Bloomberg correlation-weighted indexes. The yen slid 0.9% and the dollar rose 2.2%. The yen earlier fell as much as 0.2% versus the dollar after Bank of Japan 8301 Governor Masaaki Shirakawa vowed yesterday to conduct aggressive monetary easing to achieve the bank's 1% inflation goal. Pressure remains on the BOJ to do more to boost growth and end deflation. Policymakers will next gather for a two-day meeting beginning November 19. The report yesterday showed the nation's economy shrank in the third quarter by the most since last year's earthquake. The Trade Ministry is set to release today final figures on industrial output, which may confirm that it weakened 4.1% in September, the biggest drop since March 2011. Japan's economy looks bleak, Mizuho's Suzuki said. The pressure for the BOJ to ease further is likely to increase, lending support to the dollar-yen.